Here is a daily chart of the Nasdaq 100 futures, NQ, pre-market, live, and it's interesting. Since the top, we've had a nice orderly downtrend channel with a recent oversold reading at the bottom of the trend channel with very overbearish sentiment, at least overbearish to the degree that a seasonal rally could spring, which was my favorite scenario. But to me, it's too much too soon after the endorphins got released on the weak jobs report, which the market implies or thinks it implies a weak Fed. That is a spike of euphoria, and I don't like it if I'm a bull, which I am. I own two tech stocks, and I'm not short technology. I'm short the broad market, but that's it. So for me, I think this market has made me so potentially paranoid as far as TA goes, because it doesn't do the logical thing very often. But here we are anyway. It's at a logical shorting point. And here's a handy stop loss to that. You know, it's not far above the previous high. So if it gets above 15,500, if someone shorted this thing here in anticipation of a new leg down and it goes against them, you want to get the heck out of the way here, in my opinion, because you, I, and a world full of machines will have seen this trend line break, and who the hell knows what goes on in a seasonal endorphin release fest. But if it does correct, we obviously look to the previous support, which it had included the 200-day moving average. That was a logical area for it to find support, and that's where we had anticipated that it would stop dropping and bounce from there. However, if things get really dicey in the markets and we don't get the seasonal, at least promptly, then we're looking at a 50% fib retrace. The previous bounce came at around the 38% fib. Here's the 50 coinciding with clear support touch points. Let's see if there are any over here. There's another one, another one. Then, handily, there's another batch of touch points here, coinciding with the 62% fib retrace. And finally, the basing pattern top, if things get really dicey. And all of this is still within an unbroken bull market. But I expect that to change in 2024. And in the meantime, the question seasonally is, was this too much too soon? And if a seasonal rally is going to come, is it going to come after a more scary drop to one of these support areas? Just asking questions, showing a chart, trying to give some food for thought here. Let's pull this out, see what everything looks like. Yeah, so the other situation that could be in play, if this is a new downtrend that goes from intermediate to becomes a dominant trend, is that in hitting this high here in the 16,200s, qualifies for a test, a double top test of the previous highs. So it's not inconceivable that a bear market has already started. It's just not at all proven. It won't be proven until we start to lose some downside lower lows. And, you know, we'd manage those at such time. But for now, I just wanted to point out NQ right there at the trend line and right below the previous high. It looks precarious. Let's see what it can do as far as breaking the channel and breaking the bear trend, or doing what the chart says it should do. And again, I'm trying not to be overly logical to a chart in this market, but the chart thinks it's at a termination point with another leg coming down. I'm not going to interpret anything about the number of touch points within the channel. It missed here, but this one is important right here. Let's see how it works out. It has had a nice ferocious rally. It's at a logical termination point for this leg.